I just spent the last 10 hours researching and modeling Celsius to see if it's a good buy. I went over its 10K notes, I went over its earnings calls, I went over the management and proxy statements, and all the way to modeling it. This is the same process I've used to model stocks like Palantir at $15 a share, SoFi at $6 a share, and AMD at $100 a share. So let's get into it. First off, I like to do a little bit of an overview. So we got Celsius here, kind of just looked it up on Google, get a little overview, kind of see what's going on over the past 5 years. I'm in it for the long run, and so I don't want to be holding a stock that's not performing well. So first off, I like to look at the PE ratio. It's high, and so I know, okay, if it's high, I'm going to be demanding also a high, growth. So I go over to here to revenue and I look at year over year growth, and it's extremely high. Okay, that's good. Then I'm moving over here, taking into account, sure, I use a Claude and I type into there, I go, hey, give me what's going on in the last 3 years, see what's going on. So I'm looking into the last 3 years and what's been going on with the company, trying to just get an overview of kind of what's been happening so then I can catch up to see if I want to spend the 10 hours to actually go through and model everything. Some big takeaways from that. They had a big growth, and that's where you see a large increase in the stock price as well from 2023 up to 2024. And then you see it start to crash. You see the Celsius company, the Celsius brand, really start to slow down. And so that's kind of where that big drop and pullback comes. Then in 2025, they go and they acquire Alani and Rockstar. And so now it's saying, okay, are these two new companies along with the Celsius Holdings a good value play? And how much growth is there along with that? So that's kind of the overview. And so after that, I'm like, okay, well, it's time to get into it. So first I go into the 10K. So I'm reading through the 10K, I'm really trying to see where's growth, and I'm really trying to get to the point of, hey, what do I need to know for my model later? So what are the important parts? What's going on with that? Big thing, big takeaway right now. One, they're mainly in North America. A lot of people have been saying, hey, the growth, there's growth in America, but you also got to think about the global kind of thing too and what's going on there. Got to look at the 10 financial reports. So biggest thing to notice right here, see the huge jump in goodwill, and also really that's just coming to say, hey, we acquired a couple companies this past year, which is nothing new, or nothing that I didn't already know coming in here, so that's okay. Also, they're a huge part with Pepsi. I think that's really important too. Pepsi and Coke have both been doing kind of that. Hey, we're pulling in and trying to get extra, they're trying to get into the energy drink section, but not being in charge of the energy drink section. So that gives them the benefits of it without having to manage it because Coke products and Pepsi products are different than energy drinks. They have different customer bases and different needs and different desires. And so that you see that change. And so that's been kind of cool to see with Monster and Coke and with Pepsi and with Celsius. Over here, if you want, you can read through these, but really these are just information that I highlighted and then pulled from my highlighted 10K into here and really just trying to get into that where I can model it later. Then we also have the income statement that's along with the financial statements with the balance sheet and really just seeing, okay, revenue has been increasing a lot, but obviously it's going to come down to, what's been doing that thing. After I run through that, I like to go through the earnings calls. However, for that, I'm actually going to talk about the management team. So every time I go through a company, I go to the proxy statement. I like to see their management team, see what's going on. So first we got the CEO. That's important. Over to here, I like to take a peek at how long have they been officers, how long have they been in control and board. I don't like a lot of turnover. I think that's not beneficial and it gives misdirection. Another big thing is what their incentives are. So on the practice statement, you can go through and it can tell you what the incentives are. Here, let me move this so you guys can see it. So their incentives are mainly from revenue increasing and from stock returns. So going in, I know, okay, how is management, right? How are they motivated to do well? And they're motivated through revenue increasing and stock returns. So you've already seen the revenue increase, right, through the acquisitions. And so that I like to keep that in the back of my mind to see, okay, where are they directing it on top of just running the business? Where are they trying to move the business to and what are they incentivized through? Another thing I highlighted, these are the top percents of ownership of the Alani. So part of their acquisition deal was a percent of the company, and so that was through shares uh, given out, and so that's another important thing that Alani is reaping some of those rewards from there too. So I like to go through the earnings calls, mainly the most two recent ones. Um, and so trying to go through there, trying to get my thoughts together, trying to see what's important, what's not, and going through both their overdue and then also getting into the questions and answering and trying to figure out, okay, what's going through the management's mind, what's going through investors or Wall Street's minds, and then trying to see, okay, this is good value for me and what I like to invest through into the future. So I guess overview for this. One thing to note is their margins they're expecting to increase, and they also have 1/5 of the energy markets. So my thoughts coming out of these two earnings is the biggest one is they're doing Alani for extra growth. You've seen Celsius go from 100% growth in a couple of years. Here, let me even throw that in the model. You can see 100% going up, and then it stops. And that's where you also saw the big dip in the stock price. And so they've stopped really growing with the Celsius brand, but they acquired Alani, which has had a huge growth and huge growth through the female customers. And so that's been really interesting. And then you also notice they acquired Rockstar. Rockstar is also another energy drink, but with Rockstar, I really think the main reason they did it was to get even more corporation and connection with Pepsi. And so I think that's mainly why they did Rockstar was to get the extra increase from Pepsi because Pepsi has a great lineup and great distribution processes, and so Alani can benefit from that a lot, and then Celsius can, and that's why you're seeing the Alani, revenue. Sure, maybe that's growing a bit, but then also the Alani is really benefiting from that on the margin side of things as well. The other thing I wanted to say is I wanted to watch out for revenue maxing. Again, management is incentivized through revenue, and so how much are they doing that versus how much are they growing the company through a more beneficial way? Are they just going overdone on revenue, or are they actually trying to go through? One of the other things with the question and answer, somebody was asking, so 60% of their content or their product is from convenience and impulse buying. So I like to think about, Red Bull and Monsters. I have friends that are Red Bull drinkers and I have friends that are Monsters drinkers, and they usually buy, they'll buy a big pack and they'll have it in their room and then they'll drink them occasionally. 60% of them being convenience or impulse is not necessarily, reoccurring customers. And so it's like, how much can I depend on Celsius or Alani continually reoccurring those customers. And so that's a big concern for me. And then also they mentioned something about like maybe switching products into extra growth and extra food. And so that made me just a little bit more weary with what management's direction is really going. And so that's a little bit of a concern. But overall, their main goal this year into 2026 has been really just shifting the company into more of a I guess better margins. As you can see, they've talked about the margins a lot. They keep coming back to that and how they're really just trying to, I guess, position right and then hopefully move into more growth after that. But where does that growth really come from? So I already talked about the management. I like to go into industry research. This really helps with my growth models or for the growth modeling and seeing okay where things are going to be. So first off, I like to kind of get a hold. I already talked about Red Bull. I already talked about Monster, right? Get a hold for how much of the actual pie the company owns. And so Celsius, how much do they own of the actual pie? Are they a leader? What's the moat? I'm thinking through all that to see, okay, how beneficial is this company over a longer term, couple year horizon? And so I'm looking at Celsius and I'm like, okay, sure, we got some of that, but it's like what really distinguishes them? And they have the extra health. And I think one of the things that you see a lot with these health and fitness types of drinks is there's a lot of turnover, a lot of you already saw Celsius, right? They had a huge growth, amazing, but then they started to pull back, and then you see Alani having that big growth, and now Celsius is pulling into that and saying, hey, and my question is, how much of that is saying, hey, we want this because our Celsius is not doing well, and we want to continue to do well, and how much of that is, hey, we're just acquiring these to help them both, and so trying to figure that out in my mind has been kind of hard. Another thing I like to look at is the overall industry growth. So one, I looked at coffee. I tried to look up just energy drinks, and you can't really find much data on actual energy drinks from the past yet. I like to go to Fred. But so we got a little bit of coffee, just trying to see how much are people drinking coffee, how much are people, is this a growing thing? And I've seen on the internet too, I don't have any pictured here, but some things are projecting roughly 7% growth for the industry. And so it's like, how much will that actually happen? How much are people actually going to switch to these energy drinks or how much are people going to stay at coffee? I don't really see energy as a whole going down, but what's going to choose them to choose Celsius over Red Bull over Monster? What's going to choose Alani over other ones? And I think Alani has probably the biggest moat within the Celsius brand right now. And but as soon as something else arises, how well will Alani do 6 years from now? And so that's kind of hard. A little bit more on the acquisition. This is really just also helping me get ready for my model. Um, just running through Alani, trying to see, okay, how much did they pay for it? How do they pay for it, right? Because this is important to see, are they making good financial decisions? Is kind of what's going on. How is it benefiting? And then, looking at them differently. So getting into the model now, again, not financial advice, but what I'm doing and just showing how I think through this. Um, so first off, I broke them up into the three brands: the Celsius brand, the Alani brand, and the Rockstar brand. Had to do this because Celsius, and nobody else is doing this right now, which is boggling my mind. But Celsius, you have to look at it the three different ways. And so first off is the actual Celsius brand. So here's my growth numbers and just showing that moving into the next 5 years and seeing, okay, how much of that is actually good growth, how much of it is not so much good growth, and what's going on. And so it's kind of hard. And so I'd say the baseline is there. And this accounts for inflation. What's causing this 4%, what's causing this 7% growth? Um, One is inflation, so 2% a year, given that, and then also, a little bit of industry growth. Say a little bit, maybe 1% for industry growth, and then 1% for, yes, or I'd probably say a little bit more for industry growth, but then less for the actual Celsius brand growing on top of that, or taking a bigger chunk of the pie. Alani, on the other hand, they have larger growth. They have a big growth still with females, and I think they're going to continue to grow for females. There's no real great competition right now for females, but within the next 3 years, one could easily pop up, and there's not as much brand connection to Celsius and Alani as there has been with, say, Monster or with Red Bull, and so that's kind of made me more concerned with them in the energy drink section. And Rockstar as well. They've shown some great growth over the last year, but I really don't see much huge growth for Rockstar. What would make me switch over to doing Rockstar on a daily basis? Again, going back to the earning call, where they're talking about 60% are convenience and impulse buys. That's not everybody. And so, how much of this is just, hey, it's convenient right now, and how much of it is moving in to the future, and how much are going to be reoccurring, and thinking about that, and where does that reoccurring growth on top of just the reoccurring customer come from? So that brings me into my total revenues and then cost of revenues. Really just slowly, they're going to be focusing on increasing those margins. And so I kind of have that mapped out as well. SG&A, really just seeing how much they're spending. And so I have that marked out, really just based off of his percentage from the past. As companies grow larger, they need more employees and stuff like that. Seeing, okay, where's that going to chop off from into the future? And a little bit of this. This is some financy, really just saying, hey, we spend a lot of money on Alani and on these companies, and we have some debts that we have to pay back for that. So kind of acquiring that in before I'm getting the income. Then we also have taxes. You got to pay taxes, and that comes out. And so um, just putting that into the model to try to get a better, accurate, more reading for myself to see if I actually want to buy the company or not. Also, a big thing I noticed with the acquisitions, Rockstar was mainly, I mean, it was owned by Pepsi, and Pepsi really just took a larger share in the into the Celsius company, and they're doing that through, like, they get a dividend buyout before, like, the stock, like the other shareholders get it, and so they get pretty much like their 5%, and so that's that 56 million a year, and so they kind of have that they're taking out each year, and um, Celsius can push it back a year, but say they don't pay that 56 million this year, but then next year they'd have to pay that 100, so like they can push it back, they're still do it to Pepsi. And so not necessarily a bad thing. They've probably actually benefited from being underneath Pepsi, right, with the extra distribution and the extra margins, but something I, still have to take into account. Then I'm getting into more of the modelly side, PE ratios, what I think are acceptable PE ratios, kind of just basing off of growth and then also the PE, a multiple that I just think is normal and fair. Yeah, not financial advice, but really just kind of showing, okay, how am I getting into this, and then seeing through here future, so 2026 and beyond, so 26, 27, 28, seeing how much return I actually expect. And I'll be honest, I'm probably not buying the stock. I don't think it's that beneficial. A lot of concerns still with the negatives of the industry and long term, and so that can screw you over as a shareholder. And so I'm not seeing an absolute, it's like, do I want to, I want to own 10 stocks. Is this one of the 10 companies I want to own right now at this price? No. Now, I guess what would make me consider wanting to buy it more? Obviously, one, you see an even larger growth from Milani or even Celsius and Rockstar. If all three of these start to take off a lot, I'd see a larger, hey, maybe I was wrong. And so I think that's where you'd see growth. And then the other side is also you look at the industry, right? It's really based in America. And so um, if we can go into that and think, okay, how do I go not just into America, but looking globally, right? And what's their global expansion? How much are people, and I don't know how much people in Europe drink energy drinks. I don't know how much people around the world are going to be drinking energy drinks and what would make them choose Celsius over Lonnie. I know Celsius and Rockstar are both into the cars. Celsius is huge with like they just had some F1 deal. I think they're talking about that in the conference call with Aston Martin. So like they're trying to get into that, and so we'll see how much that plays out. But how much am I confident in that, extra growth? And so I'd say if you're looking at people who are actually bullish on it, I think you're going to see them saying, yeah, there is a lot of upside or there's enough upside to where I want it. But for me personally, I probably won't buy it as I just don't think it's safe enough for me to want to buy it for how much return I expect to get out of it. So that's pretty much my whole run through on Celsius and why I'm currently not holding it and why I probably won't buy it in the mean term. But yeah, excited to hear what you guys think. Let me know. This is my first video, I guess. So let me know if it was a good one. Let me know what I missed, if there's anything, obviously, and pin that and let me know. But yeah, I hope you guys enjoyed. Hopefully you learned something here and good luck modeling it yourself. So take care.